Mangalam, do stay on. We have a lot of other stocks to discuss with you as well, including Trent, and maybe we'll try and get a word on Kalyan as well. But let's ask, Siddhartha Khemka what he thinks about QSR. Siddhartha, welcome to the show. Thanks for joining in. It's interesting, this note, obviously the market's definitely, setting up and taking notice of it. And probably at an interesting time, we're talking about urban consumer slowdown. So obviously there's some kind of down trading happening. Maybe instead of going to the fancy fine dines, you go back to your QSRs on a lighter note. But anyway, what do you think of the listed entities here? Does Devyani fit the bill for you? If not, maybe the others like Westlife?
Yeah, good afternoon. I think, yes, if you look at, there has been a lot of debate around the consumption theme this time around. And definitely we are seeing at the margin some contraction in terms of the spending, especially from the urban areas. And our channel checks also suggest that while the quick commerce, which was also seeing a strong uptick until now, at the margin again, they are also witnessing some pressure with a lot of expansion that they are doing. If you see most of the top three quick commerce companies, they have raised funds to expand, and that is putting them on a lot of pressure to deliver on the numbers. Coming back to the QSR, I think, yes, some of the players are definitely showing the uptick in terms of growth, and Devyani is something that we also like compared to a Jubilant, which has done well in the recent past, and a Westlife again, which has done well, and now with the valuations, we believe Devyani could catch up. The company is definitely focused on the long-term growth, particularly through the expansion in the smaller towns, diversifying its brand portfolio across QSR as well as the casual dining space. So we've seen that if you look at, they've continued to expand, focus on the value-driven offering that the KFC, Pizza Hut, which is expected to drive the transaction growth. And hence we are expecting a recovery in both in the operational performance as well as in terms of growth. So looks good as of now within the QSR space. Devyani looks good with the improvement in growth, valuations comfortable. We recommend a buy, and we currently have a target price of 215.
Okay, all right. Siddhartha, let's hear out from Mangalam as well, yet again about Trent. That stock is in focus. It's the top winner on the Nifty. Mangalam, you want to fill us in with the IC note that came out?
Yeah, Trent had been on such a one-way tear that brokers were left wondering at what point do we initiate coverage. And then after a 25% downtick that we've seen on the stock from its highs hit in October of close to around 8,200 odd rupees, maybe this was the right time that brokerages looked at the business. No real difference when it comes to the business, because the thesis is pretty simple. Irala has initiated coverage of the buy. Their target price is 8,500, and what is their thesis? That Zudio will grow ahead of peers despite intensifying competition because of their successful private label strategy, robust transaction led by differentiated fashion, and also prudent focus on both quality at a reasonable price. Things that some of the Zudio customers are pretty sanguine about. They expect Zudio to grow at 31% CAGR, and they expect Westside to deliver steady growth. So steadiness in Westside with additional growth coming in from Zudio is what the thesis on Trent was. After a 25% correction, maybe Elara believes that this is a good time to enter, because they do expect the company to do about 27% revenue CAGR over the next 4 years with 38% net profit CAGR. But just keep an eye out on the valuations. They are ascribing 57 times EV to EBITDA based on September 27 expected EBITDA to their core business, and 4 times EV to sales on Star Bazaar. The only risk factors that they have are slower than expected store additions, price war among value players, and perhaps some sort of failure to gauge fashion dynamics. So these are the risks on the board. Stock down 25% from the highs, maybe a good entry point as per Elara.
Okay, all right, Mangalam, thanks a lot for that. Well, Sid, I want to ask you about two names. I recall you all were very positive on two names. One was Trent, and you all got it bang on, from very, very early on. The stock went dancing away. It's come down a little bit, but I think you'll maintain your positive stance. So what's the view out there? And also Kalyan Jewellers. That's another one that you all were quite positive on, I think. We've discussed that in the past as well. The stock has come down to 535. It's 10% down, got smacked in the last 7 trading sessions. What's the view? What should investors do? Because it's clearly creating a lot of panic.
Yeah, Nigel. I think, yes. So thanks a lot for the compliment. I think, yes, we continue to like Trent. The stock has corrected because of the growth rate kind of coming down from that 40-50% plus to now. What even we are expecting is that going forward next 2 to 3 years, Trent should be able to deliver a 30% plus earnings growth, and that is a good enough earnings growth because we believe that is an industry leading growth, best in class operational efficiencies, store additions, and I think the brand talks for itself. So pretty steady. I think the correction is only offering an opportunity for people who had left out or could not jump in to get into a quality name like Trent. We maintain a very positive view on Trent with a target price of almost 8,300, a significant upside from current levels. So we believe that the outperformance from Trent should continue, and that should help the stock price. Coming to Kalyan, I think that's a difficult one to take in the current market. As you rightly said, the management not only did a con call, they went on most media channels, refuting the claims of what the rumors are going on in terms of the income tax raid or something else. I think there is no smoke without fire. The market definitely seems to know something that we as analysts are yet to know. I would suggest that while the core business, even the Q3 business update that came, three-quarterly business update was pretty strong for Kalyan, which makes us positive on the business. But purely looking at the stock price, I think one should wait for a couple of more days for the clarity to emerge, and then only take a call on this stock at this juncture.
We'll have to wait by for that because, just to give one more observation out there, the promoter entity came and bought around 535, but I'm looking at the holding at 62%. Out of the 62%, 20% was pledged.
Exactly.
So we just need to keep that in mind as well. The promoter entity needs to come out there, tell them what are your intentions. We backed up the stock at 535. Are we interested yet again? Point number one. Point number two is that pledge intact. Now that's going to be important as well because clearly, very, very nervous looking screen.
No, absolutely. Because in that, call yesterday, there were multiple issues that were raised and they dismissed them in almost everything, including allegations of bribery and, so on and so forth. There's so many, audit issue with auditors. They said nothing is wrong, audits are fine.
They joined on HTRO here and they clarified everything, and even after that the stock came down. Mangalam and Hormuz, I recall, they asked them everything, whether it's the aeroplane, whether it's the pledge, whether it's the inventory, everything they asked them. And after that the stock saw further downtick. Yesterday they had a call, still the stock is down. So now I think something needs to be done.
Absolutely. You need to keep those pledges in mind for sure, considering that out of 62%, 20% is pledged now. Whether, someone's selling those pledged shares in the market, who's to say, but perhaps some more disclosures will help. That's Kalyan Jewellers. Let's quickly move on and, look at some of the other stocks that are moving around as well. On the brighter side of things is, by the way, HDFC AMC reported numbers yesterday. The numbers were good. The stock was reacting during market hours, but today, of course, a lot of notes have come through, and it seems the market's liking the story and lapping onto it. One of the issues that has been highlighted is that generally, they've tightened the leash on operating costs, and also the fact that the manner in which commissions are being paid out, that's getting rationalized. So that seems to have kind of tied into the profitability this time around. Siddharth, what do you think? I don't know if you have coverage on this particular asset manager, but HDFC AMC or in general, the listed mutual fund universe, do you like it?
So yes, we definitely have coverage on AMCs. We recently covered a lot of names in our theme report covering the capital market sector. So while our top preferred name in the AMC would be Nippon Asset Management, but HDFC did come out with very strong numbers. We have a positive view and a target of 5,200. What we see is that the management commentary saying that while market seems to be chasing a lot of new products, they are focusing on market leadership in the existing products, and we are seeing good inflows into the equity AUM, which is kind of improving the yield. So I think that strategy from a house like HDFC, focusing on their long term funds and making a leadership out there, that stands out clearly in a market where we are seeing flood of NFOs and you don't have a track record. So definitely differentiates HDFC. With the market improving, I think flows continues to be strong and they are gaining market share. That should also help in the overall growth. So we maintain a positive view. We believe that increasing share of equity in the overall AUM, 30% CAGR in equity AUM versus an overall AUM CAGR of 24%. That should help in improving yields, and hence we maintain a positive view with a target price of 5,200.
Absolutely take that point, and especially on the NFO bid, because I track this from a personal finance standpoint as well. I think a lot of people are saluting HDFC AMC that in a market where others were launching defense funds, they have an old defense fund. They actually stopped taking subscriptions because this is an asset manager that felt that it's getting a little too overheated, not the time to be chasing defense as a secular sort of segmental play. Today, of course, the stock's doing really well.
Well, TVS Motors has pretty much moved to the high point of the day on the back of the two-wheeler data for the month of January. The stock is up nearly 1%. Reliance Industries is higher ahead of its numbers tomorrow. It's expected to be a good showing, an improvement in the company's EBITDA led by the oil to chemicals business because Singapore GRMs recovered in Q3 versus Q2. For the telecom business, expected to be a steady quarter, a growth quarter after the July tariff hike. So Reliance Industries is seen buying. And MobiKwik, a stock that we spotted earlier, well, the 30-day lock-in has come to an end today, and about 4.6 million shares are tradable from today. And the stock, remember, has had a fantastic run-up from its issue price of 279. So perhaps that's weighing on MobiKwik.
Yeah, that explains this big decline, 12% down on MobiKwik today. By the way, Bank of Maharashtra numbers on your screen. The NPA picture seems to be stable. Stock's down about 1.2%. Remember, this is one of the banks where at least the in-principle approval seems to be in place to divest some of the government's stake. And yesterday it had a big rally, and right now also a little bit of a spike up coming on the stock. But by the way, we were discussing the capital markets theme in the market and stocks which you can still bet on or not. We had a conversation with Dinesh Thakkar of Angel Broking this morning. Angel came out with numbers yesterday, numbers a little subdued. He sort of gave out his view on how Angel is now dealing with the impact of the change in a lot of regulations, including the true to label norms. And of course, the change in the F&O market regulation itself, with now the number of expiries, weekly expiries, coming down to just 2 in a week. Hear out what he has to say, and then we'll ask our guest about it.
In a digital kind of industry, there is a fixed cost. And if we get additional customer on the same fixed cost, and if we are able to improve our margin based on increment in customer base, there is no need for a price increase. So we will wait for 1 or 2 quarters before we decide on any price hike if it is needed. But my gut feeling is that looking at the growth that we are seeing in this industry and looking at kind of participation from customer, we would be able to recover our cost and maintain this margin of OPM of 50%. So we will take 1 or 2 quarters to decide whether further price hike is needed or not. To look at this quarter, all kind of worst thing which can really dampen sentiment and reduce volume had happened, which includes FII selling, US election, our government spending being low, economic growth being low. So if I remove all that noises, I think we would be fairly in the range of all inclusive impact of regulatory changes to the tune of 18 to 20% impact on our top line. But now over here, what is important is that growth that we are seeing in customer base, that is not slowing down. So our customer base is growing at the rate of 40-45%. So this impact what we are seeing, it is just a one-time temporary impact.
Okay, so that's Mr. Dinesh Thakkar saying that Angel One is going to get through this. In fact, even without a price hike, they'll take their margins back to 50%. So that, what do you think? The market's definitely believing that view. Look at the way the stock's done today, almost 6% higher.
Yeah, so I think yes. So if you look at some of the levers that they have in terms of pricing, they would use the timing of the usages now as the promoters have highlighted remains uncertain. But we believe that things would fall in place. Margins, as they highlighted again, should improve. What we also see is that the investments in new business segments, that is keeping the cost structure elevated, and there is still some time to see the fruits of some of the new businesses, be it wealth management, AMC business, to start contributing meaningfully to the overall numbers. But nonetheless, given the current uncertainty, we see that Angel is managing the situation well and is demonstrating the ability to protect its profitability. So that is something which the market is liking. But as I said again, there are near-term challenges, be it on the cash segment, be it on the F&O regulation impact. So that could keep the upside in check. Nonetheless, we remain positive on the long-term story. We have a positive view and a buy rating. we have revised our target a bit lower to about 3,200.
Thank you very much for that, Siddharth. We need to slip into a very short break, but as we do that, here is some good news for all our viewers. India's business news leader is now just a click away, introducing the CNBC TV18 all-new app. Get instant access to breaking news, in-depth articles, financial world updates on your fingertips. Download the app now from the Apple Store or the Google Play Store, or just scan the QR code on your screen.